Negotiating a bigger salary is not the best way to build wealth or even close. I'll show you. Most of us are never taught how to actually build wealth, so what do? We follow what everybody else does, hoping that it'll make us wealthy. Get a good job, work to get a raise, work to get a promotion. Now, while these things can make you financially comfortable, which is fine for most people, they will never make you wealthy. Doesn't matter how much money you make. The difference between people who become wealthy and everybody else is that the majority of people are working for themselves to get a raise. Wealthy people and people who become wealthy are working for their company to get a raise. Let me show you exactly what I mean. There are 3 reasons why most people will statistically not become wealthier even if they get a raise, and none of these have anything to do with inflation or the rising cost of living. The first issue is the least impactful, but it's the quickest for me to talk about, which is taxes. The more money you make from your job, the more taxes you're going to have to pay. If you go from earning $40,000 a year to $50,000 a year, your top tax rate goes from 12% to 22%. I want to clarify what that means so I don't mislead anybody, because we have a marginal tax rate, which means the more money you make, the more taxes you pay on that more money. So if you earn $50,000 a year, that means that on your first $11,000 worth of income, you're going to be paying 10% of this money in taxes. On all dollars that you earn between $11,000 and $44,000, you're going to pay 12% of this money in taxes. So when you're earning $40,000 a year, this is where you stop. But then for every dollar that you earn between $44,000 and $50,000, you're going to be paying 22% of this money in taxes. The second reason is even more impactful, and if you stick with me to the end, you're going to see how each one of these 3 layer on top of one another, but this is how our economic system works. If you look at any wealthy person in this country, what you'll see is that the reason why they're wealthy isn't because of what they do, it's because of what they own. For the majority of people, their dream is to do this. They want to go from analyst to associate to director to VP to CEO or something in this fashion, because every time you move up, you're going to make more money. You're going to make a bigger salary. But what wealthy people are doing is you have wealthy people over here on the side saying, I don't want to work to do this. I want to work to own this. It's a completely different way of thinking. See, when you're working to climb this, you're working for a salary. You're working to increase how much money you get for what you do. When you're working to own this, you're getting paid with equity. You're getting paid for what you own, and you're getting paid for what you do. Now, this is where most people say, what are you talking about, Jaspreet? That's only for rich people. You have to be a multimillionaire to start doing this. You have to be rich to start doing this. You have to have rich parents to start doing this, but that's not true. It means you have to start changing the way you think. You have to start developing your financial education and start using your money differently. That way you can start building equity instead of just a bigger salary, because not only will you be able to earn more money, but you also get to pay less money in taxes legally. This is what financial education is all about, and you don't need a ton of money to start. You can start investing like this with as little as $100, but you have to start. It's not going to happen overnight. This is something now you have to work towards. Just like how you have to work to climb the corporate ladder, well, you have to work to build equity. It takes time to do this, but this can give you much more freedom and much more wealth than this can. Now, if you want to learn more about specific strategies on how to invest and how to generate this type of passive income, one of my companies, Market Insiders, has a free ebook on how to start generating passive income and how to start investing your money, even if you don't have a ton of money to start. If you want to read the ebook, it's completely free. I'll put the link to how you can download this ebook down in the description below. The biggest problem here is, for one, people don't understand this concept, and then second, they misplace where this equity should be. See, when you ask the majority of people what is this equity, the majority of people immediately think about my home. I'm building equity in my home. I'm going to buy a big home. I'm going to work to pay off my home, and I'm building equity. But that is the worst kind of equity that you can build, because that home equity that you have, well, it's a money pit. That home, when you buy it, becomes a money pit until you sell it, and then you hope that you're going to be able to sell it for a profit. And then if you sell it, you give up the home that you live in. So you never actually get to use that wealth, that equity that you're building. Versus if you go and build equity, say in investing in a company. If you go out and invest in the Amazon Corporation, you become one of the owners of the Amazon company. You don't have to actually work in the company to get paid, but you own a piece of the company. That is a type of equity. If you were to go out and start investing in rental properties, and now you own these properties that are paying you with cash flow, that is a type of equity that you're building there as well. And these are investments that are paying you, that are working to build you wealth. If you went out and started a business, you have equity in your business. Again, if you ask wealthy people, how did you become wealthy? It is, I own something that made me wealthy. My stock investments made me wealthy. My real estate investments made me wealthy. My business made me wealthy. It's not my salary that made me wealthy. Now, if you're using your salary the right way, it is now I'm working to climb the corporate ladder so I can get a bigger salary, so I have more money to invest and build this equity. Now you're doing that the right way. But statistically, what we've seen happen is that the majority of people are not doing that. You know that saying, more money, more problems? Well, the reason why that's true is because for the majority of people, more money means more liabilities. This brings me to the third reason why statistically the average person will not become wealthier just because they get a raise. It's because of lifestyle inflation. Here's what ends up happening to the majority of people who follow the traditional system. You work to get a good job, you work to increase your position in your company, you work to get a bigger salary, then you pay the highest taxes because, well, our tax code has 3 different types of income. You have earned income, which is the money you make from your job. You have a portfolio income, which is the money you make from most of your investments. And then you have your passive income, which is the money you make from your real estate investments. Do you want to know which income comes with the highest tax rates and the lowest tax deductions? Take a guess. It's the money you make from your job. And I can tell you this as an attorney who's not your attorney, but this is where now when you make money from a job, you're going to be paying the highest money in taxes. When you make money from your investments, not only can you pay less money in taxes legally because there's a lower tax bracket for this income, but you can also get more tax write-offs and more tax deductions, and it's 100% legal because that's what our tax code says. So now you're working to climb the corporate ladder to make more money, you're paying more money in taxes, and then what ends up happening for the majority of people is every time you make more money, you don't use more money to buy this, you use more money to buy liabilities. You use more money to buy more Gucci, to buy more Louis Vuitton, to buy nicer vacations, to go to nicer restaurants, to buy a bigger home, to buy a bigger car, because now that you earn more money, you gotta look like you have more money and you have to show it off. The majority of people earn money to buy things while wealthy people are earning money to buy money. They're earning money to make more money because then when they make this money, the first thing that they do is put that money here into their investments. That way they can own more of the corporate ladder, they can have more equity, and their money can be making them more money, while for everybody else, they're making money here and then they're blowing that money on liabilities. And then even on top of that, not only are they blowing that money, they're financing now these liabilities. You're going into debt to buy that Gucci purse. You're going into debt to buy that car. You're going into debt to go to the Bahamas. Now, not only are you earning money to buy more liabilities, but you're using your money that you're earning today to pay back yesterday's liabilities. If you asked 100 people who are having financial problems, what will help you with your financial problems, all 100 of them would say, if I earn more money, my financial problems will be better. And then what we've seen happen statistically is that the majority of these people will earn more money and then boop, their liabilities will go up too. You dig yourself up into a bigger hole as you earn more money. You make more money, you have bigger liabilities, you have a bigger financial hole. When what you should be doing is, if you're working to earn more money, you should be using the money strategically to invest more money, because wealthy people don't become wealthy because of what they do. They're wealthy because of what they own. So you, as a wealthy person, need to be focused on what you're owning instead of just what you're doing, because what you own can pay you a whole lot more than what you do, and you can pay less money in taxes, and it can give you a whole lot more freedom. The thinkers, the C-level executives, have a fiduciary duty to increase the share value of their corporation. AKA, the C-level executives have a duty to increase the stock price. Who does that benefit? It doesn't benefit the workers unless you're taking a piece of your paycheck and you're buying some stock in your company.